watching Business Television India.
Hello and welcome to the Mutual Fund Guide. It's all about your funds and your returns. I am Muralidhar Swaminathan. Joining me on the show is Vatsal S. Shah, Head of Wealth Management at Social Finance. Vatsal, welcome to the show. Thanks for joining us. Vatsal, let's go straight to the first caller. Amit is on the line from New Delhi. Amit, good afternoon. What's your query?
Yeah, thanks for taking my query. My father is a retired person and he has invested in post office scheme in the MIS, but which is, I think, giving a less return. So I need to understand if there is any mutual fund which can give a slightly better return while saving his capital. If you can answer that.
Right. Before I toss this query to our financial expert, what is your father's objective? Does he require regular cash flows, or can he stay invested without withdrawing any cash for, say, 5 years?
No. He would like to have a regular cash flow either on a monthly basis or on a quarterly basis, on a half-yearly basis.
Right. Right. Vatsal,
yeah. Hi, Amit. So very valid question, and many retired people have these queries now. Looking at the current market scenario, or even if you are expecting certain regular cash flows, then around 9% is what you are getting is already very good. What you need to consider is whether your father is falling in any higher tax slab. So if he is in the 20% or a 30% tax slab, then there are better alternatives through a balance fund, which can be then taken through a systematic withdrawal plan. But if he is not falling in any tax bracket, then I think the benefit will be more or less similar if he goes even through a mutual fund or through this kind of product. So that is something that you need to evaluate. And if he is looking for a balance fund, then he can consider HDFC Balance Advantage Fund. In today's market, the market is quite suppressed, and what we feel is that after a year he may get some good returns, and then he can start his systematic withdrawal from that.
Yeah, but investing in lump sum is also a bit of a risk, isn't it?
It is a risk in today's market, because next 1 year can be very volatile, looking at the political scenario or even the global scenario that is happening.
Okay, so Amit, very clear, if he can't take risk, it's better avoidable going through equity. The safest one is the balance fund, but even there 60-65% is invested in equity. So therefore there is a risk associated, and you are saying that he needs regular cash flows. So the safer bet would be to remain in post office savings scheme. On that note, let's move to the next query. Ashish Mittal from Bengaluru has mailed us this query. He has invested 25,000 through SIP in Reliance Large Cap, L&T Mid Cap, Motilal Oswal Mid Cap 35, SBI Small Cap and HDFC Small Cap funds. He wants to know if he should stay invested or switch to other funds.
So, hi Ashish, the selection of funds has been very good, and these are one of the top good performing funds in the respective fund houses. I think what he should do is he should review his investment every 2 years, and we would recommend that he can add some spice to his investment portfolio, and that can be through funds which are not generally recommended. So an Axis Large Cap and even an Invesco Contra fund is very good. So that is a different flavor to the entire portfolio.
Okay. Yeah, so that could give there will be a little bit of risk.
No, I wouldn't say risk, but they are not very widely followed funds, but they are performing very well. So it's not the general flagship funds that are there in the industry,
right?
But they are giving excellent returns. So to
they are not popular, but they are doing well.
Yeah.
Okay. Prasanna is on the line from Coimbatore. Good afternoon, Prasanna. What's your query?
Yeah, good afternoon, sir.
Yes.
Sir, actually, 1 year back I have invested a lump sum amount with HDFC Prudence Fund and ICICI Select Mid Cap. Okay. See, I have opted dividend reinvestment. The problem what happened is, actually the dividend declared by those companies was around 80 to 90,000 rupees.
Okay.
But my net asset value now the present fund value is only 10,000 rupees higher than what the amount I have invested in that fund.
Okay.
Now my query is, instead of dividend reinvestment, should I opt for the dividend payout?
Okay. Now, if you ask for dividend payout, see, it depends on your objectives, Prasanna. What's your objective?
sir.
Do you need cash flows every month or every quarter, or would you like to stay invested for longer term?
No, sir, I am not going to touch this. At least, for example, what I mean to say is,
Yeah.
at least if out of these funds, they are giving per unit 30 paise from HDFC
Right.
and 20 paise from
I say,
ICICI.
yeah.
Based on my units, at least 8 to 9,000 rupees or 10,000 rupees, I can get it on every month.
Okay.
So that there will not be any principal erosion. That's what I feel.
Right. Right. Okay. That's your objective. Okay. Fine. So, would you like to answer
Yeah,
that?
I would just like to. So, Prasanna, just before the budget, a dividend reinvestment would make sense because it was more tax efficient way of booking profits. But now, what we are hearing by certain industry experts and what has been talked about is mostly this segment is going to be discontinued. Reason is you are being taxed at 10%. And which will get reinvested, and then if you have a capital gain, you will be further
Again
getting
taxed.
a long-term capital gain. In any case, you will be taxed at 10% if you go through a long-term capital gain or through this. So I would suggest if you don't need the income, then you move it to a growth option rather than a dividend payout option, because right now the market is at a very suppressed levels. So no point taking money out at this level. Might as well, once the market even bounces back or over the next 2 or 3 years, once again the bull market is in full flow, that time when you start taking out money, it makes sense. So I would suggest to move into a growth option.
Right. Prasanna, does that answer your query?
Yeah. One more question I
Sure.
have with you, sir.
Sure.
Can you please help me out?
Yeah.
Yes.
Sir, actually what happened is, I was investing 20,000 rupees in SIP with the different funds.
Yeah.
One is Reliance Regular Savings Scheme and one is Franklin Templeton.
Okay.
What is that fund? The Prima Fund. Prima Fund.
Okay.
Okay.
And one is Tata Mutual Fund, Tata the Banking and Financial Services
Okay.
Fund. And another one is Sundaram Midcap Fund.
Okay.
Okay.
Okay, see, I don't find much appreciation from Sundaram Midcap and Tata.
Yeah.
Right.
But this Reliance and Templeton is paying me some good size of bonus on every March. So that almost 10% it is. I am getting a return on it.
Okay.
But what should I do? Should I stop the SIPs or should I continue with the SIPs?
Yeah. So I would first talk about Sundaram Midcap Fund. It is a good fund. It comes, but it is volatile. So see, right now it's better to continue your SIP because the returns are not there. So you're getting units at a lower NAV, and you will see the returns sooner or later, because ultimately Sundaram does tend to perform over a longer period of time.
Yeah.
And coming to Tata Banking and Financial Services Fund, I would suggest to look at other diversified funds. Though banking is very suppressed, but you see, banking is a very different ball game altogether, because in PSU is at all-time low and private is at all-time high. So it's better to move into a diversified fund rather than getting into a sectoral fund in the banking space.
Okay, move into a diversified fund that will give you a diversified portfolio and slightly better return compared to a sectoral fund. Karthik is on the line from Chennai. Karthik, good afternoon. What's your query?
Yeah, good afternoon, sir. Thanks
Yeah.
to BTVI for me on the show.
Yeah.
I am. Hello.
Yes, continue, please.
Yeah, I am 42 years old.
Yeah.
My goal is for my kids' education, kids' marriage, and for my retirement.
All right.
Okay.
Currently, I am doing SIP in DSP BlackRock Midcap Fund, Franklin India Smaller Companies Fund,
Yeah.
Franklin India Focused Equity, SBI Blue Chip, and ICICI Value Discovery Fund. I am doing 5,000 SIP on each fund.
Okay.
My time horizon is 10 to 15 years.
Okay.
Please let me advise me on this outlook.
Okay, your objectives are very clear. You have a long-term approach to this, Karthik. So definitely it should do well. But combination of
Yes.
funds.
Combination of funds. I think he has a good combination of large, mid, and small caps. I would suggest to add some large cap element to your funds. Also, you should, you said you have a 10-year to 15-year horizon. So I think that makes it fine, because if his goal was just 5 years away, it would not make sense to achieve it through the SIP route. Coming to retirement fund, you know, the thumb rule that we use is whatever you are spending on a monthly basis today, 1/3 of that you should put in your retirement SIP. So you need to calculate how much you are spending. That will help you benefit even after inflation at the time of retirement. So that is one piece of advice that I would give you.
Okay, so basically try and see if you can add a large cap fund. I think that will really help you in the longer term, Karthik. And Karthik, you know, the one other question that I have for you is, this is a suggestion from our experts. You know, you should also review your funds once in 3 years at least. You know, because these are, you can't just invest, lock in now and leave it for 15 years. You know, every 3 years or 4 years you need to review it, take a look at it. It's also possible that it would have achieved the objective that you had put the money for.
Yes.
Okay. So on that note, let's go to the next query. Nikhil Motwani from Thane has mailed us this query. He has invested 12,000 through SIP in SBI Blue Chip, Kotak Select Focus, Motilal Oswal 35 Multi-Cap, HDFC Mid Cap Opportunities, Reliance Small Cap and SBI Small Cap. That's a lot of funds. His goal is kids education and retirement. He wants to know if he should increase this amount in SIP or switch any of the funds.
I think the combination of funds again here is a good combination of funds, more risky. You may not see any return for the next 2 or 3 years, because largely you are into mid cap and mid and small cap. But if your goals are beyond that, then it's a good selection of funds. I would again suggest to add either a Franklin India Equity Advantage, which is a large cap fund here, or a ICICI large and mid cap fund over here to add over here.
And preferably through the SIP route.
Through the SIP route.
Yeah. Right. Okay. Do we have time for one more query? No, I think, I think we have time for one more query. Debashish Banerjee from Kolkata has mailed us this query. He is 35 years old. He wants to invest 10,000 per month in a pension plan to accumulate a corpus of 1 crore for his retirement.
Okay.
What's your recommendation, and is the target achievable?
Yes. I think at the age of 35, he has about 25 more years to go for retirement. It's a very good number. 10,000 for 25 years will easily give him about 1 crore of rupees. What I would suggest is that he should do an SIP for next 25 years and then move it to a balance fund at the time of retirement. So at least he gets the growth for next 25 years. I would recommend HDFC Capital Builder fund for that. Kotak multi-cap fund, and a little bit of small mid-cap, so L&T mid-cap fund can be considered for that.
Right. So there is HDFC Capital Builder, Kotak Standard and L&T mid-cap fund are some of the funds you can look at and invest through SIP to achieve your target of for retirement purpose. With that, I think it's a wrap on this edition of the Mutual Fund Guide. News and updates will continue on the other side of a very short break. Stay tuned to BTVI.